Welcome back to the ETF Inspector. It is Saturday, June 28th, getting close to lunchtime, and this will be the video covering the trades and holdings for the seven individual income funds listed in the title. They are AMDY, AMZY, APLY, FBY, GOOY, MSFO, and NFLY, or covering AMD, Amazon, Apple, Meta, Google, Microsoft, and Netflix. All right, in this video, the way I get the information, we go over to YieldMax's page, we click on our ETFs, go to the covered calls, and then we have to select each one individually. I've selected AMZY for the example here just because they will be declaring this week, so we'll go a little bit further in detail on them. We can see previous distributions for them as well. But we scroll down, and we have to do this for each individual fund to put these together, and we download the holdings. All right, when you do, you get something that looks like this. Not the easiest thing to look at and talk about on the screen, so from that, I create this. Just the last point. So their synthetic is literally split up. Here's one part of the synthetic, here's the other, then their options are in between, then their treasuries. It just makes for a mess. Outstanding shares. So it's a lot easier. I keep the synthetic together. I can run formulas off of it, and then I show you your options down here. So that's how I create this chart, and then I just have to update my formulas based off of the new strike prices selected. Okay, so we will just start in alphabetical order. We'll go a little bit more detail on Group D since we're going to be making a guesstimate. So starting off, AMDY is part of Group C. If you're watching this video and you own them, you just got 46.29 cents per share yesterday because they paid out this past week. AMD closed at 143.81, AMDY at 823. There was a pretty large increase yesterday, 1.325 million shares. That's a weird way to say that. 1,325,000 shares, bringing them up, getting close to 21 million shares. As you can see, now that there's a non-trading day and everything can catch up, the NAV and the share price are right in alignment with each other. They're usually within a few cents. There's $170 million managed in the fund. Let's take a look at how they traded on Thursday and Friday. They added to their synthetic on Thursday, right? You can see them buying calls and selling puts out till July 18th. That's the synthetic. So that cost them because the puts are nearly worthless and the calls are well in the money. So that made it look like a loss, a $2 million loss, but technically they got $2 million worth of new money came into the fund and they put it to work. So don't consider that a loss. Maybe I need to kind of start separating out, adding to the synthetic. That's tough. It's hard to say because when we close out the synthetic, we do count that as income made. So I'll have to think about how I want to adjust that. But on Friday, they closed out the week's trades for a loss. They had to pay $4.18 to close them, and they only collected a little over $1 to open next week's trades. That's because they had to roll them up. They were closing 142s and opening 152.50s. So that's going to hurt. Cost them nearly $1 million. So as we go into next week, we see they have calls at 150 and 152.50. Those are 4.3 and 6% out of the money. So that's pretty nice. As you see, as we go through the rest of them, we're a lot closer to the money on a lot of these. But maybe it's because this one has one of the higher IVs of about 41.5%, or some of the others are more stable. The big thing with them is their synthetic is worth $40 million, and it will be getting closed out soon. So in this before your next declaration, your synthetic will get closed out, and they're going to take a $40 million profit. Now they'll have to use some of that to create the new synthetic, And, there are losses in trades that came with that. The only way you get a synthetic worth that much is the stock price soars. Well, if the stock price soars, then every time you sold a call, you lost money on it. But they definitely didn't lose anywhere near what they made. So next distribution will be nice for AMDY. Next is AMZY for Amazon. We'll take a look at their trades. We made a video earlier in the week, so that's why we're only talking about what we haven't talked about so far. So Thursday and Friday. And I don't know if I mentioned it or not, but I'm going to just start making these videos on the weekend. So I'll let you know how they did for the week and let you know how the week coming is. I'm not going to keep on making throughout the week. It's just keeping me up too late on those nights. So they bought to close 215s on Thursday and rolled them to 222.50s for next week. They took a $114,000 loss. And then on Friday, they closed more 215s and opened 225s. So they have 222.50s and 225s for next week. Again, that was a loss as well, paying over 6, collecting about $1.50. $271,000 loss on that day. So we totaled up the 4 weeks worth of trades within this cycle, and they actually lost $889,000. So when we look at what our distribution is going to be, because they're going to declare this coming Wednesday, the 2nd, all right, 4 days away now. Generally, the goal was to pay out 90% of what they made. Well, they didn't make anything. They lost anything. So they can't do that. The backup goal is to try to pay out the IV of the underlying. So if its IV is about 27%, then their goal is to pay out 27% annually. So if we take 27.2% multiplied by the fund price divided by 13 payments per year, we get 34 cents. Well, even though they have not been doing well lately, they have been paying well over that. And they have a synthetic worth $50 million sitting here in the wings. So I don't think they're going to try to disappoint us with a 34-cent distribution after last month's 59 when they have a $50 million cash out that's going to happen in the next month. That's worth $2.89 per share. So I think I wouldn't be surprised if we got even more than 60 cents a share. But they don't have to do any of that. They could pay us $34 this week and then pay us $2 next week or next month. So, but here's my guess. Take it for what it's worth. Nothing. But we talked about the synthetic is doing great. It was a July 18th 185 with Amazon at 223. That makes it, when they close this out, since they started out selling a put and buying a call, when you close it, you buy a put, which is practically nothing, and you sell the calls worth 50 million. That's why it's worth so much. Now, options wise, going into next week, looking like we're going to lose again, unless Amazon goes down. 222.50 is already in the money by 0.36%, and then their higher calls are only 0.76% out of the money. So we need a down week for Amazon in order to win these trades. Never good to be rooting for that, because a down week, although you'll win your trades, you'll lose value of your fund slightly. So the goal is for the stock to go up, but just not to go up beyond our call strikes. I haven't been mentioning these. I always just assume people are watching, they know. Most of you probably know more than me. But just in case, so if you see a negative, that's a sold call. That's where we're making the money. They buy calls further out of the money as insurance. So now when you've got these matched up with these, 222.50 to 230 is a $7.50 spread. That means the maximum amount they could lose if the stock runs up is $7.50. After that, they will go up dollar for dollar together. So they're limiting the worst case scenario that they could lose money on. So that costs us money. But at the end, we buy them and we get to sell them at the end. The goal is for everything to end worthless, because we collect a lot more selling than we spend buying insurance. So that's all I'm going to say on that. The fund is worth around 285 million. There's a little over 17 million shares. And as you can see, again, the NAV and the fund price are in alignment with each other. I keep this. I don't really ever talk about it. It's just kind of a thing. The rolling, just how much it would cost to close out the spread. So obviously it's going to be high if the stock price is close to the strikes or over them, and the further out of the money these become because the stock drops, the cheaper it will be to close these out. All right, so there's our guess, 60 cents on AMZY. APLY is also Group D. So similarly, we'll take a look at their trades Thursday and Friday. Thursday they made 342,000, so we got a winner here. Closed out their 205 calls for June 27th, paying 12 cents. Opened 205s for next week, collecting 92. There's a win. And then closed more 205s for 15 cents and sold 202.50s for $1.90. That's how that profit came about. Then the next day, what did we do here? Sold 210 calls. So these were insurance ones, because if we just have an S, it's just a sale of something that you had already purchased. If you're selling it for the first time to open, it'll be SS, sold short. Similarly, if we buy a call, it's just a buy. If we are closing out, buying something that we have already sold, it'll have a BC, buy to close. All right, so we sold some 205s, bought to close some 202.50s for this week, sold some 202.50s for next week. I don't know why these got separated. So these go along with these. So we bought the close 202.50s this week for 23, sold them for $1.10. Then we bought more for 16 to close, sold for $1.89. Overall profit in $316,000. But again, we have to look at the full 4-week cycle. So we totaled all the profits and losses of trading, and they lost almost $7 million, $6.8 million in trading. So once again, we go to the income estimate, and it's blank because you can't distribute money that you didn't make. Next, we look at, I don't know why that's out to so many digits. I'm not going to take time to change it now, but the IV, so 25.2% times the fund price divided by 13 comes out to about between 24 and 25 cents. Went ahead last time around, they paid 31. Looked through, let's take a quick detour. Who are we on? APLY. Looked at what 24 or 25 would come up as, and it would be almost the lowest on record. There was one worse back in September of 2023. So I don't think they want to set a new record for a low, but at the same time, their synthetic is almost not worth anything. So they don't have anything to bank on, and it's not getting closed out anytime soon. So I think they're going to pay us a little extra, 28, and it's going to end up falling between 25 and 31%. But don't be surprised if it's 24 or less, right? Because they lost money. They lost a lot of money. The net assets in the fund are 131 million. There was a decrease of people selling out of the fund. So they dropped down to 10,350,000 shares. Our NAV and the closing price are within a few cents of each other. We said the synthetics August 15th, 200 with the stock at 201. So at least it's finally in the money. Making a little bit, but not worth that much, 13 cents a share. For next week, very tight. Got 202.50 for 4,000 contracts. We can't afford for the stock to go up $1.42. And then also we have 205s that are almost 2% out of the money. Okay, those are the only two Group D, so we'll be able to move through the rest a little quicker. FBY, covering Meta, is part of Group B. They last declared on June 18th. Next one is July 16th, 18 days away. Meta closed at 733, FBY at 1694. There was a decrease of 175,000 shares, bringing us down to 10,425,000. You can see our NAV and fund price are within a penny of each other. There's $76 million managed in the fund. The synthetic is doing well. It's a July 18th, 660. It will most likely get closed out by the next declaration, but it's not definite. but 660 with the stock price at 733 makes it worth 18 plus million, or $1.80 per share. Again, you're not going to get $1.80. For starters, when they make money, the goal is to pay out 90% of it, and it's 90% over the course of the fiscal year. But don't forget all the times they paid out after taking a loss. That's got to play into that calculation as well. Let's see, they have 732.50 strike price and 735. Those are already in the money by 0.15% and just barely out of the money by 0.19. So we need Meta to drop below 732.50 this week in order to make the maximum, keep the maximum amount of premium. So these are the kind of things where you have days where the stock goes up and the fund might go down or not go up as well, because as this stock goes up, you are losing dollar for dollar. It goes up, so your value goes up, but every time it increases higher than this, the amount you have to pay to close this goes up with it. So that's your reason why, hey, wait a minute, why is the FBY fund dropping while the Meta is increasing? That's your reason, if they're played too tight. But on the other side, if Meta goes down a little, FBY could go up because their cost to close out will decrease, and so it could have a good effect on your fund price. All right, I think I already said it. 176 million in the fund. That's it for FBY. GOOY, covering Google, part of Group A, previously declared on June 11th, paid out 39.78 cents per share. Next one is July 9th, 11 days away. Their synthetic is a July 18th 180, with Google closing at 178. So they're not currently worth very much. Actually, it's a negative. And GOOY closed at 1225, right on with what it's worth. The way you calculate that is the net assets, which is basically the sum of values of everything divided by the amount of shares. So this is just money, right? It's not like other stocks when you're calculating what they're worth. There's a whole lot harder calculations going into that. It's 132 million managed in the fund, 10,775,000 outstanding shares. The synthetic is going to cost 800,000 to close if we did it right now. So this is where we get into a tough situation, a real tough situation. We are coming up on this end date on the synthetic. We needed to get above 180 to not have to pay to close it out. Problem is, we needed to stay below 177.50 in order to not lose money closing out these trades. So we're in I guess you'd call that like a catch-22. It can't go up and it can't go down. We're going to lose one way or the other here. So that's it. All of them, all their contracts are sold at the one single strike price, and they are currently in the money by 0.58%. So they need it to go down next week to win these trades. All right. MSFO, covering Microsoft. Feels weird saying MSFO, even though FBY and GOOY sound kind of weird too. Part of Group C, so they just declared last week. You just got 48.48 cents per share deposited in your account yesterday if you own MSFO. So we're 25 days away till the next one. They paid us out double what the IV of the fund is, even after losing money. So can't complain on that one. Microsoft's at $4.95, MSFO at $17.77, actually at a 3-cent discount from what it's worth if you bought it at close on Friday. 7,150,000 outstanding shares with net assets of 127 million. The synthetic's doing well, again out till July 18th, so it will get closed prior to the next declaration, and it's currently worth 16 million, or $2.28 a share. So you can anticipate a nice distribution next month, but you can also probably bet that the reason this one we just got last week was double what it should have been, because they're counting on the fact that they've got some extra coming. Or maybe that's happened months ago previously, and it's just kind of getting closer to the end of the fiscal year. I haven't covered them long enough to be able to track that. Once the fiscal year ends and we start a new one, I will be able to track where we are, plus or minus, on what they've paid out. Very tight again on these. We need Microsoft to stay below 500 because it's only 0.82% out of the money, with 495, almost 496 being the closing price. And then we have another set of calls sold at 502.50. They're 1.3% out of the money. Oof, I think I forgot to talk about a couple of trades. FBY lost $2.5 million trading on Thursday. They closed out their 705s at a major loss, and their 702.50s, both well in the money. Sold 735s and 732.50s for next week. That's why they lost almost $5 million. GOOY on Friday bought to close their 172.50s. Not terribly far in the money, but enough to lose. Sold 177.50s for next week. Then closed 172.50s that were for next week, and sold 177.50s as well. Closed some more 172.50s, sold some more 177.50s. So overall, taking $1 million loss on trading that day. MSFO traded on Thursday and Friday. Closed out their 485s for over $10. Sold 500s for next week. And then losing $713,000. Then bought to close 495s for this past Friday and sold 502.50s for the upcoming week, losing another $110,000. All right, that last one's NFLY. I'll get the trades first so I don't forget them. On Thursday, this is the synthetic, so they bought into more of the synthetic. So this is rough because the synthetic is already doing very well. So when you buy more into it, 1140, right? So when you buy more calls at 1140 and your stock is at 1300, it's going to cost a lot. And when you sell puts at 1140, they don't bring in very much. So, but not to worry. People bought into the fund. They just put the money to work. It even though it shows like a loss, it's just putting the money to work. They didn't actually lose the money, but it's going to look like that. So with those new money bought in, they went ahead and added to the position equal to that, and then also rolled, closing this past week's 1290s and opening 1320s for next week. All in all, $1 million loss on the trading day. NFLY's also part of Group C, so if you have them, you got 43.03 cents per share deposited in your account yesterday. This one was rough. They paid a 29% yield when the 30-day IV of Netflix is 44. So they did lose money, but we were expecting it to be better, especially since the synthetic's doing so well, and it will be getting closed out before the next one. So who knows? All we can do is see what they do and hope for the best. But so that was not a good one. Next one should be a good one because we're going to close out 24 million before then. There's 174 million managed in the fund, 9,150,000 outstanding shares. The NAV and fund price are within 3 cents of each other. And as you can see, going into next week, we're already in trouble. Basically 1% and 0.25% in the money. So we need Netflix to drop next week below 13.10 just for us to not lose these trades. Okay, that's everything I have. Appreciate you watching. Got a dad joke of the day for you, but now you know how they traded in the previous week and what you can look forward to this upcoming week, and if you have either of the Group D funds, what you can expect, roughly, guesstimate, my guess. Sorry, here comes my dog running through. My kids just got home from camp, so perfect time to close this. Okay, dad joke of the day. I only seem to get sick on weekdays. I must have a weekend immune system. That's a good joke for the weekend. Okay, have a nice rest of your weekend, and good luck trading next week.